This is a 3-year chart of SoFi stock. In the past 3 years, SoFi stock is down over 65%. Here today, the stock trades under $7 a share. Starbucks stock, usually one of the most consistent, great companies in the stock market. This is a 3-year chart of Starbucks stock. The stock is down over 35 percentage points in the past 3 years. It is going through a very, very tough time right now. And so I thought today, let's go ahead, let's talk about Starbucks and let's talk about SoFi. And we're just going to stick to talking about these two stocks in this video here today. We're going to do full SWOT analysis on both of these companies. Then we're going to get into the valuation of both of these companies. And the third thing we're going to discuss in today's videos are Starbucks or SoFi. Are these stocks a buy now? Are they stay away from? And then if they are buys, what are the price brackets that make sense to buy shares? Where's like the aggressive ads area and those sorts of things, okay? Hope you guys get a lot of value out of today's video. I thought this would be a very, very valuable video for everybody out there to kind of learn a little bit about how I think about companies and whatnot. So all I ask in return for this valuable video here today is for you to smash that like button and make sure you're subscribed here to the channel, folks, okay? Appreciate y'all joining me as always. If you're looking to apply to join my private group this upcoming week, then click the pinned comment down there, fill out an application, and we'll see if we can get you in there in the next week or two. That's access to all my best course curriculums, access to 6- and 7-figure Discord community, all those sorts of things, and weekly exclusive videos, okay? Alrighty, so SWOT analysis. Now, this is something you should learn usually if you go to any sort of business school. You're going to learn this probably your freshman year of college, maybe at the latest sophomore year of college. Strengths, weaknesses, opportunities, and threats. That's why they call it SWOT analysis. So strengths would be things your company does well, qualities that separate you from your competitors, internal resources such as skilled, knowledgeable staff, tangible assets such as intellectual property, capital, proprietary technology, things like that, right? Weaknesses would be things that, you know, let's just call it your company lacks. That's a good way of putting it, okay? Things your competitors do better than you, resource limitations, or unclear, unique selling proposition to the market. Opportunities would be underserved markets for specific products, few competitors in your area, emerging need for your products and services, press media coverage of your company for opportunities, and threats would be emerging competitors, changing regulatory environment, negative press media coverage, changing customer attitudes toward your company, things like that, okay? Alrighty, so let's go ahead and go through these. So first up here is Starbucks, and then we'll go through the SWOT analysis on SoFi. Starbucks. The strengths, and I try to think of 5 strengths, weaknesses, opportunities, and threats. And by the way, how do you even get to a place where you can do SWOT analysis on a company? You've got to fully look into the company. That means things like reading 10Ks, reading 10Qs, listening to conference calls, all those sorts of things. If they have investor reports and presentations, you can look at those. So really researching about a company so you can feel like, okay, I know where this company's strengths are, their weaknesses, opportunities, threats. If you don't really understand the company and what's going on there, you can't even do a SWOT analysis. Okay, so strengths of a company. First is Starbucks. I mean, their brand. Their brand is, I would say, one of the most famous brands in the world, just to be quite frank, right? And especially in the developed world, one of the most famous brands ever, just to be quite honest. I mean, you say Starbucks, it's a household name. I could go in my neighborhood right now and go door by door and say, you ever heard of Starbucks? And I don't believe there would be anybody that'd be like, no, I never heard of Starbucks. What is that exactly? Not in my neighborhood. And I could probably go all throughout all of Las Vegas and go door by door and say, you ever heard of Starbucks? And I highly doubt anybody's going to be like, no, never heard of Starbucks before. So that's great when everybody knows your brand, right? Second thing is location selection. You know, usually Starbucks picks very, very good locations nowadays. I think maybe 25, 30 years ago, you could have said something different about Starbucks, some maybe questionable locations that were kind of hidden away, you couldn't really see. Nowadays, if Starbucks is opening, they're usually opening on Main and Main, and they're opening right on the road. Everybody can see it. There's no like question marks about that, right? Drive-throughs, all those sorts of things. Third thing is their stores are very, very profitable. I mean, you know, the cash-on-cash returns for their stores overall is immense. It's not like they're the most expensive things to build out of the grand scheme of things, right? You go into a Starbucks, you're like, is this really that expensive? No. Okay. And obviously straight profit machines, pretty much all of them are ATMs. I mean, if a Starbucks location loses money, that'd be shocking. Shocking. Fourth thing is low employee costs. So, I mean, who's really working at a Starbucks? It's mostly people that are making $15 or less an hour, I would say, at most locations. So low employee costs. And the fifth thing is appeals to the masses. You're selling coffee, right? That's their main product. That's the huge appeal to the masses. So many people drink coffee, it's ridiculous. So it's not like it's hard to get people to be interested in this product. It's coffee at the end of the day, right? So Starbucks really appeals to the masses. Now, as far as weaknesses for the company, I think there's 5 core weaknesses with Starbucks. One is the food. They try to really go the easy way out in regards to food, which is kind of like more packaged food and then heated up in a glorified microwave type thing. And even like their pastry related stuff, they get that delivered. That's an easy way out. But at the end of the day, you're not going to be quality, right? You really want great quality. You got to make stuff fresh right there. And so food is one of their weaknesses. The second thing I think is a weakness for Starbucks is social media and PR. I mean, you think about obviously what has happened with that company recently in the past few months, they got a lot of people really mad at them that were on one of the sides, right? And so if you've got a great social media team, PR team, they could bury something like that pretty quickly. Third thing is where it doesn't go into some dramatic situation, right? Third thing is the CEO. I do believe the CEO is a weakness for this company overall. Since he's taken over as CEO, look at Starbucks stock. It has not done well at all. Look at the company's even financials. Look at the actual business model. It, is not in the best place right now. I mean, that latest earnings report that came out this past week, that was arguably the worst earnings report Starbucks has had, since Rona. But Rona was completely out of their they had no choice, right? If all of a sudden people say you got to close down this and close down that, you're stuck with that, right? This is a whole different situation, So I will say the CEO is actually a weakness of the company. The fourth thing is, right, which, by the way, right there, that's where you have to ask yourself, this is a very important question. You have to ask yourself, is Starbucks can you consider to buy it? It's a serious question, right? Because if you feel a CEO is a weakness of the company, that's not good. But as Warren Buffett would say, what's Warren Buffett's famous saying in regards to CEO? Warren Buffett's famous saying is, buy a company any idiot can run, and I'm not calling the current Starbucks CEO an idiot, so let's just be clear about that. But Warren Buffett says, buy a company that any idiot can run, because eventually one will. And so, that's the situation with that, right? Fourth thing is, if you think about Starbucks, they're not seen as a value. And I know the CEO went on, interview on CNBC and was talking with Kramer. He's like, we got to try to get people to see the value. I've never walked away from anybody ever saying Starbucks is a value. People do not view Starbucks as a value. If anything, they view it as kind of a little bit of a ripoff, or it's just very expensive, right? So the value is not really seen there overall. Fifth thing is, obviously, Starbucks, there's a lot of their products are not seen as healthy. When you think about the Frappuccinos and some of those products that people actually go to Starbucks for, right? Not seen as healthy products overall. So that doesn't go well with a society. That's a good chunk of the society that is trying to be healthier overall, right? Now, in terms of opportunities, delivery is, I think, a great opportunity for the company. They've been building this out with their delivery partners over the past, I would say, kind of 5-6 years. If you went back 10 years ago, Starbucks delivery wasn't even something you ever thought of. And I would say nowadays, there's a good amount of people that get delivery from Starbucks. So I think that continues to be a big opportunity for the company over the coming years. The continuation of building out their app, which I would say their app's a big success, and that's one of the biggest successes of this company over the past 10 years. Their app's very successful. They got to continue to build out that, continue to build out the rewards program, continue to incentivize their most loyal core audience to come back as Starbucks again, right? Third thing is, I think another opportunity for the company is non-coffee related drinks. So as long as they continue to expand into other drink opportunities, I think that's a great avenue for the company, especially for those folks that are maybe looking for something in the afternoon. Fourth thing is international expansion. They still have a lot of opportunity international, right? Fifth thing is food. I told you, food's one of their weaknesses. If they could get food right, and they could actually take this more serious, and they could get their food to be as craveable as a caramel ribbon crunch Frappuccino is, then we're talking. Then you're really, really successful in food. So that's an opportunity right now for them, okay? Now, threats. I think there's 5 core threats for the company. One is Dutch Bros. Now, technically, any coffee shop that opens is a threat to Starbucks, but I'll be honest, like a mom and pop coffee shop, not much of a threat to Starbucks. It's mainly somebody that could be seen as just as good, if not better than you, right? And they have this sort of expansion opportunity where they're trying to build hundreds and then thousands and thousands of locations. And that's more of like a Dutch Bros, right? And so I called out this as a threat. I can tell you, I called out Dutch Bros as a threat like 5+ years ago on the channel, right? And I think they remain a huge competitive threat. I see it out here in Vegas. I've seen it in Arizona, being out there. And if you live on the West Coast, you've been able to see, not everywhere on the West Coast has Dutch Bros, but there's a lot of the West Coast has Dutch Bros. And you can see they open up right across the street from Starbucks, and they do big business, man. Big business. So Dutch Bros continues to be a threat. Minimum wage, okay? If minimum wage keeps going up, it's a threat to Starbucks. Remember what we talked about. One of their strengths is low-cost employees, right? Well, if minimum wage keeps going up and up and up in different cities and different states, right? Next thing you know, you're having to pay your employee force more and more and more, and then you try to go up on your customers, and then you lose out maybe even more on being seen as a value, right? I already talked about Starbucks, one of their weaknesses is not seen as a value. Minimum wage keeps going up, you got to go up on that price, and next thing you know, your coffee's, $6, $7, $8, right? Third thing that's a threat is coffee prices in general. Coffee prices had been hot for quite some time. I think there's some weakness here recently, but coffee prices had been very, very heated, so that caused a problem. Fourth thing is any movements around like anti-sugar, I think is a threat for the company, which, trends in health come and go, right? But things on social media can go big very fast. And so all of a sudden, if you get some very anti-sugar movement, I don't think that's going to be great for Starbucks, considering a lot of their drinks they sell contain a lot of sugar, right? The other thing I think in this one, I've never really seen it take off big, but if there was any sort of anti-caffeine movement or something like that, I think that could obviously be a threat to Starbucks as well, right? Now, those are probably shorter term because I think at the end of the day, people are addicted to sugar and addicted to caffeine. So, and they'll probably come back long term. So I don't, those could very negatively affect a Starbucks for a few quarters or even a couple years if something like that grew very, very big. But unfortunately, I do believe people will come back to those things at the end of the day, okay? So let's just keep that in mind. Now, in regards to SoFi, what are the strengths, weaknesses, opportunities, and threats for SoFi? SoFi, the strengths are, it's a digital first bank, right, online. Most people use the SoFi app if you use SoFi. And so I think that's a real strength of the company, being that kind of new age financial institution for people, right? The second thing is, I think SoFi really appeals to millennials, Gen Z, I think Gen Alpha, as they're going to enter into the ages that they set up bank accounts and do all those sorts of things. So I think that's really good. They're going to do a good job, in my opinion, of capturing the next generation that will grow their wealth immensely over the next 10, 20, 30 years, right? And then hopefully those people will stick with SoFi as their wealth goes up and up and up over the next 10, 20, 30 years, right? Third thing I think is a strength for the company is got an ecosystem of products. And when I say ecosystem of products, I mean, it's like once you sign up for one of their products, they're probably going to get you in another product, another service. And you even look at what they're doing with Galileo on that side, it's incredible. So they definitely have an ecosystem of products. Fourth thing I think is a strength for the company. Unlike Starbucks, it was a weakness, right? For SoFi, I think Anthony Noto is a real strength of this company. I think he's a very brilliant mind. If you look at his pedigree, where he came from before he was at SoFi, he's held a lot of very, very important positions at several different companies, and one of those was Goldman Sachs. And so ultimately, I think he's a strength of the company. And the fifth thing is liquidity position. They're not even remotely close to maxed out on what they could be doing for loans and those sorts of things. And if you look at regulations and what they would need to hold regulation-wise, they're not even remotely close to, exceeding capital requirements or something like that. So they are in a really good liquidity position. As far as weaknesses for the company, I think customer service is a little bit of a weakness. Even my brother-in-law, I was talking with him recently. He did a product with SoFi, and he was at the end of the day, the gist of the story was he didn't walk away with like, SoFi's got good customer service. It was kind of the opposite situation. He didn't like the customer service at SoFi, okay? Second thing is, it's not like you can, with traditional banks, let's say you signed up with Chase. Well, you can drive down the street. There's probably a Chase 3 minutes, 5 minutes, 7 minutes from you, and you can go in there right now. Not right now. I'm recording this on Sunday, but basically almost any other day, Monday through Saturday, and go speak to a banker, right? So customer service, I would say, is a weakness for the company as of right now. Second thing is traditional bank stickiness. The problem is when somebody's in an ecosystem, they're going to likely stay in that ecosystem unless the current ecosystem, makes them mad or something like that, right? And so if somebody's been a customer of Wells Fargo for 15 years, it's going to be hard to win that customer away, right? Same thing with a Chase or a Bank of America or some regional bank and things like that. So, this is like something that's good for SoFi long term if they can capture the next generation. But in terms of trying to get baby boomers over to use SoFi and things like that, very, very difficult. Third thing I think is a weakness for the company is ultra wealthy clients. SoFi hasn't really built out the products and services yet to really attract people with $10 million net worth, $50 million net worth, $100 million net worth, where somebody like a JP Morgan Chase really, really captured that audience very well, and there's a few other companies out there. So they don't necessarily have that $100 million client. You're not really looking to go to SoFi for that as of right now. 10 years from now, it could be a different situation, but as of right now, no. Fourth thing is their past financial statements are very, very bad, very, very bad. So that's something to keep in mind. If you look at SoFi's numbers over the past 5 years, especially as far as the bottom line, they're not very impressive. The revenue growth is very impressive, but not the bottom line, right? And the fifth thing is there's really no legacy behind SoFi that benefits a lot of these other companies. You think about JP Morgan Chase, and you think about JP Morgan, the original super successful banker. You think about Wells Fargo, and you get these images of like a horse and a carriage, and back in the day, they were carrying money around with horses and stuff like that. So they don't really have that sort of legacy like a lot of these other banks. Now, opportunities, there's a lot of opportunities for SoFi. These are the 5 main opportunities in my opinion. One is to increase profitability. They just barely reached profitability, and I'm talking in the last few quarters here. So they got a lot of room to increase that profitability over this next 3, 5, 7, 10 years. I can tell you that much. Second thing is continue to grow market share. They're clearly taking market share. The more and more customers they keep gobbling up, they're just going to continue to take market share from their competitors. Third thing is word of mouth as they scale out. I think this is big because the thing is the more people that use SoFi, the more people are going to tell their friends, their family members, hey, using the SoFi service, it's pretty awesome. You should sign up for them, right? And so I think that's big. Imagine, like the newer generation talking to their friends about, hey, I need to set up a bank account with direct deposit. Who do you bank with? Oh, I bank with SoFi, right? This is very, very valuable. And like, oh, how do I set that up? Oh, just get the app and then you can, do this here. Like, that is always such a super valuable thing, okay? Incredibly valuable. And so the word of mouth is massive for this company, right? Oh, I just got a loan from SoFi, blah, 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 at this rate to pay down my credit card that was at this rate. You should do that as well, right? I mean, those sorts of word of mouth things, those, where friends and family are talking, so valuable. Fourth thing is, trust over years. So the longer we go here and SoFi is a successful company, the more trust they'll continue to build and build and build because SoFi is still, in the banking system, SoFi is still relatively a new player, right? And so as the years tick on, SoFi is going to build more and more trust naturally as they've been in the market longer and longer. And the fifth opportunity for this company is, if you think about SoFi, it's US, right? Maybe in 10, 20 years, it's seen as an international company. So outside the US is a huge opportunity long-term for the company, right? Threats, I think apps like Cash App, Venmo, PayPal, these sorts of things, if they continue to push further and further into things that could compete with SoFi, that could be a threat. As of right now, they haven't done it yet really so much, right? It's not like you're going to Cash App or Venmo or PayPal to really set up a bank account or even a savings account. Like people aren't really going to do those sorts of things, right? But if they keep kind of pushing and pushing and pushing over the coming years, it could be a threat, right? Something to keep an eye on. Another threat I think is Apple and Google, right? Is iOS and Android, are they going to get more serious about trying to be the banking customer because they view that as a stickiness? Apple and Google, they don't want to get into banking because they're like, oh, we're going to make money from banking. They would just want to become people's banks, so it makes this ecosystem even stickier because it's like, oh, I have my bank account through iOS or Apple or something like that, right? So that's another kind of, I think, potential threat. We'll see. It hasn't, materialized in anything yet, but threats are things that might not have occurred yet that could be occurring in the future, right? So something to just kind of keep an eye on there. And we know Apple's having a lot of trouble moving iPhones. So does Apple want to try to get into banking and try to make their product stickier? I don't know. iPhone units down 10% last quarter. Year over year, that's bad, right? Third thing is traditional banks. upping their tech, right? So traditional banks are usually seen as not very tech friendly relative to somebody like a SoFi. So, but if these, I can tell you these financial institutions are spending a lot on tech, especially somebody like a Chase, if they continue to spend, maybe they are seen as just as good as SoFi over time, right? Fourth thing that's a threat to SoFi, and this is a threat to honestly all banks, recession, right? In recessions, it depends on how bad the recession is, loans aren't paid, right? People's credit goes down, which means you can't give as many future loans. It's an ugly situation to go through. It's a threat to SoFi. It's a threat to everybody that's in the financial space, right? Fifth thing I would say here is if rates moved very unfavorable and they moved there fast. So SoFi does a lot of very intelligent things, and Anthony Noto positions the company very intelligently in terms of like hedging portfolios, selling off certain amount of loans and things like that. They do a lot of brilliant things. But let's say there's some sort of phenomenon where rates went up very substantially, much more than SoFi or anybody anticipates. So let's say inflation started getting out of control again, right? And let's say the Fed had to raise rates considerably. That could be a threat to SoFi if they're not positioned for that, right? And it's impossible to really know exactly how SoFi is positioned because it's banking, right? And so not everything's going to be crystal clear. You just got to kind of put the trust in the management team overall. Let's say rates dropped off a cliff all of a sudden. Is SoFi ready for that, right? Maybe they are, maybe they're not, but it's something that has to be considered out there. So that's banking, okay? Alrighty, so that's the strengths, weaknesses, opportunities, and threats, the SWOT analysis of both these companies. So now let's get into valuation, and then we'll talk about if Starbucks and SoFi are a buy now, and what are kind of the prices that make sense, okay? So ThousandXStocks.com. The reason I built this service is so things like this could just cut down my amount of time spent. I mean, something like this would have usually taken me an hour plus to find out all these numbers and metrics and things like that versus nowadays, like it literally happens in seconds for me now that I have 1000xstocks.com, which I think we just hit 400 plus people on the wait list. We opened that about a week or two ago. So if you're looking to join the wait list for 1000x, go to 1000xstocks.com and join the wait list there. We got monthly plans, yearly plans. We could probably get you in maybe in the next few weeks. Okay. So SoFi obviously trades at a ridiculously high forward P, and it has no trailing 12-month PE because they were unprofitable, right? So that forward P is very scary. Many stocks traded kind of in the 20 to 28 range, somewhere in there. I mean, yeah, SoFi at a 74, no bueno. But remember, they're at an infant stage of profitability. Also remember, this company's got very nice revenue growth. Analysts have been bringing down their expectations, but the revenue growth expected for SoFi is significantly above where an average stock is in the market. So is a forward P at a much higher number than where a traditional stock is at? Sure, but the growth rates are also significantly above where traditional stocks are at, and the company just got to infant stage of profitability. The other thing to consider is the earnings per share growth. Next year's earnings per share growth is expected to be 160% roughly. That's an incredible number, guys. Absolutely incredible number. So that's something to factor in there, okay? So whenever you're looking at a stock, you don't want to just look at it and say, okay, here's where traditional, stocks, you also want to look at it versus other companies. So I want to put SoFi against fintech companies like PayPal and Square, and then we're also going to put them against more like traditional banks, right? Now, to comp SoFi against fintech's tough because fintech's got different business models than a SoFi does. SoFi is more of a bank. PayPal and Square are more traditional fintechs, right? It's also hard to comp them against banks, traditional banks, because those are very well established, low growth, super profitable companies, right? But we still got to try to, compare these companies against each other. So this is going to always look very ugly for SoFi because they haven't been profitable, right? So these sorts of metrics are going to look very ugly. And the forward P is going to make the company look very ugly as well, compared to someone like a PayPal that trades at a 12 and somebody like a Square that trades at a 20. But the thing is, right, Square's been benefiting huge from crypto because crypto's been on an insane bull cycle for really the past 12 to 18 months. So that's benefited Square in a massive way. And then PayPal's been profitable for a long, long time. So they're just much more of a mature company than a SoFi that's just getting the infant stages of profitability at this point in time, right? Now, if we look at SoFi here versus PayPal and Square, a number that matters significantly is right here. Next year's earnings per share growth is up 160%. It's supposed to be up 160%. We'll see where things trade out at. But yeah, that obviously is significantly above a PayPal, significantly above a Square. And a Square we'll see because, if crypto also went the wrong way next year or something like that, that could very negatively affect them overall. So overall, SoFi, if you compare them versus PayPal and Square, it looks overvalued, but when you take into account the growth rates of a SoFi, especially in regards to the bottom line, it's very, very compelling. Now, if you want to look at SoFi versus JP Morgan and Wells Fargo, what we're going to find is, once again, this is the ugly part, right? This is a part that makes SoFi look very bad. Forward P is 74. JP Morgan trades at a forward P under 12. Wells Fargo trades at a forward P of 12. It makes SoFi look really bad. But the growth rates, right? Next year's expected revenue growth, look at this. I mean, SoFi, 15-16% expected. JP Morgan could go negative, and Wells Fargo could be flat to negative, right? And then you look at something like next year's earnings per share growth, 160% expected for SoFi versus 1% expected for JP Morgan and like 7% for Wells Fargo. And we'll see if they even hit that 7% number. So this is where you get into, this is why you can't just look at one metric and say, oh, this stock is overvalued or undervalued. It doesn't work like that, right? You got to look at way more metrics than just one. You can't just look at a forward P of 74 in SoFi and say, it's overvalued, can't buy it. No. You also have to factor in the insane growth rates that are, we can call it 16 times maybe, where an average stock is. Now, when we look at Starbucks here, we're going to see Starbucks trades at a forward P of about 17, so below, kind of where the, many stocks in the market trade at. Trailing 12-month P of under 20, PEG ratio of 1.2, so right about where you would expect for a company like Starbucks. Gross margins look a little weak for the company. Net margins look like they're right where they should be. Trailing 12-month price to sales ratio is right in where the company should be. So far with Starbucks, definitely doesn't look undervalued. Now, the one thing I do have questions about, if you look at analysts have a current year expected revenue growth of 9% or so. Next year, 9% or so. I don't know. Are they going to be able to actually hit that? And I do have real questions if they're even going to be able to hit those analyst expectations when you just saw revenue go negative, right? Are they going to be able to flip things quick and get revenue to positive? I don't know. I think that's a big question mark. Earnings per share growth of the company, we'll see, right? Analysts have been growing 17% or so. Many stocks kind of are at the 8 to 12% range. So if that happens, that would be great, because you're getting a stock that's probably trading a little under market valuation, but could EPS growth 2x or so the average stock of the market, which could mean there's like a 2x opportunity in the short term. But I do have question marks if they're actually going to pull that off there, right? Now, when it comes to Starbucks, I want to kind of look at them versus like a McDonald's and a Dutch Bros, right? McDonald's is kind of a good comp because it's kind of a value famous company that competes in the same space. Bros is a very fast-growing company. So if you look at Starbucks versus Bros, it looks like Starbucks is a lot better deal, but also remember Bros is like very early stage in their profitability cycle, and they're really focused on revenue growth and store growth right now, whereas a Starbucks is much more focused on bottom line, right? If we look at PEG ratio, Starbucks clearly beats McDonald's and Dutch Bros by quite a considerable bit. 1.2 PEG ratio, price to earnings growth versus 3 for McDonald's, about 3.19 for Dutch Bros. Gross margins are roughly in line with Bros, but significantly under McDonald's. Net margins, they have a lot of room for net margin expansion, maybe over time. Now, keep in mind, McDonald's gross margins and net margins look always tremendous, and a lot of that has to do with royalty fees and things like that. So it's not a straight comp. It's not as perfect of a comp as it would be if the only things that factored into that was just like, how much profit they make off a burger versus a Frappuccino or something like that. So just a little food for thought in regards to, no pun intended, in regards to McDonald's and kind of their gross margins and net margins looking so insane, right? Now, if we look at trailing 12-month price to sales ratio, 2.27 for Starbucks versus about a 7 for McDonald's and versus about a 5 for Dutch Bros. So overall, when I look at Starbucks valuation, I think this is a much easier one to value than a SoFi, because SoFi is literally just starting to get to profitability in the last couple of quarters. Starbucks is very built out company, right? Very mature company, much easier to value. And it's hard to say Starbucks stock is not a good value. At the end of the day, when I look at all the ratios, all the metrics, Starbucks looks like a good value overall. So where I would put Starbucks is I would say Starbucks stock is a buy. I would say in the $80 to $90 range is kind of a small buy at this point in time. It used to be very easy buy under 100, but since the business model has really weakened considerably recently, I think you kind of got to look more in the $80 to $90 range for like very small minimalistic buys. $70 to $80, which is where it's trading right now, I think is kind of like a medium buy. Like, okay, I can add some shares here and there, but you don't want to go too crazy necessarily. I think if it goes to 60 to 70, that's where it starts to, ramp up, and it's like it's a strong buy at that point in time, right? This is definitely a range, if we could drop it under 70, that it would be pretty much, if I think about a price that would be impossible for me not to start buying Starbucks stock, I think it's if the stock went under 70. I think if it went under 70, you would have to see me start buying Starbucks. Okay, so that's kind of where I'd put a strong buy. And then if it went into the $50 to $60 range, which I'm not so convinced it's going to go there, but let's say it happened. Okay, let's say the whole market weakened and brought down Starbucks more. Or let's say the next quarter was bad as well. Then, that's kind of a load up buy situation. But yeah, getting into Starbucks in the 50s, I don't know, man. That's going to be a tough one. What about SoFi? So SoFi, I would say, well, $10 to $11 range is kind of like, a good place to, small buy. $8 to $9 range, I think, is kind of a medium buy for the stock. $6 to $7, I think, is a strong buy. So right now, the stock's in that range. And so I view SoFi as kind of a strong buy right now. It really makes sense to buy SoFi stock. I think it's impossible not to be attracted to buy SoFi stock in this range it's at right now. Given the growth rates, given where the profitability should go over this next 3, 5, 7 years, it should be like night and day difference. Like if you look at SoFi's financials 5 years from now versus for today, it should be a very different place. If it was to go in the $4 to $5 range, then it's kind of a load the boat buy opportunity. I don't know if that's going to happen, just to be quite frank with you guys, okay? Alrighty, hope you got a lot of value out of this video here today, looking at SWOT analysis, looking at valuations, and trying to figure out if these stocks are buying and what prices make sense. Appreciate y'all joining me as always. Thanks so much for being here, folks. If you're looking to apply, join my private group. If you enjoyed this video, you'll definitely enjoy my private group, because those course curriculums go so in depth on so many different subjects, and growth rates, how to value these stocks depending upon different growth rates, trying to figure out good pricing, just immense amount of things, income statements, balance sheets, all sorts of things. Apply with the pinned comment down there, and we'll see if we can get you in there in the next week or two. And then you also get access to our Discord community and exclusive videos I produce weekly in there. Much love and have a great day.